Hey, this is Scott Cole, and I just wanted to provide a quick commentary for today's market action. I'm still seeing a lot of signs of skepticism about this move since the October lows among a group of active traders that I correspond with, and a lot of them are trying to call a top in here soon, and it's based on mainly what's going on in Europe and Greece and potential slowdown in here in the first quarter. My feeling is that this trend is up, and it's going to stay that way until the market decides that it's no longer going to go up anymore. But the signs that I see, and I don't pay attention to support and resistance and all that stuff. If you look over the last few weeks, first of all, it's obvious that the volatility dropped off significantly, so that suggests that investors are more comfortable with the market. We don't have these wild gyrations during the day. But going back, at least a month, if you just look at a lot of these trading days, really since mid-December, and I'll just start on this big up day right here. Most trading days, the market, and this is the Dow Jones Industrials, most trading days, the market closes at the top end of its range. Here's an exception here and there, but the exceptions are very few. Most days, and this includes, some days where the market started off pretty weak in the morning. Like, for instance, just a couple days ago, on Monday, the market was down over 100 points in the morning, and it just came storming right back. Well, not storming, but on a, pretty even keel, and then it ended up closing slightly lower for the day, but at the top end of its range. And even today, even though it didn't close at its highs and it had traded closer to its highs for most of the day, you'll have to pardon me with my battery issues I have going on. Even today, the market closed in the top half of its range. So that's a sign of a strong market, not a sign of a market that's ready to roll over. And a lot of people keep talking about various levels in the S&P, and I'm just going to bring that chart up here quick. A lot of my friends have been talking about various levels in the S&P, and that all started at 1,300. If it fails at 1,300, it's going to roll over. Then you started hearing stuff about this golden cross, which is the 50-day moving average crossing the 200-day. And I believe it did that today. But, I don't pay attention to those kind of things. It's clear to me that the trend is up. So who cares about whether the moving averages are crossing or not? So this chart today, the S&P closed at 1324 and change on the cash index. Here's an interesting chart I'm going to bring up. Russell 2000. Strongest performer of the day, up over 2%, closed right off of its highs at about just under 810. Now, that's been kind of lagging compared to its previous highs and compared to the other indices, whereas the NASDAQ 100 has been at basically 10-year highs, I believe. Yep. So NASDAQ 100 made a new high for this move, and really going back to, let's have a look. It's basically your highest levels since early 2001. So still way below the highs of 2000, but those were such speculative blow-off highs. It's no surprise it's going to take a while to get back up there. But compared to the market we've had for the last decade plus, this is pretty significant. And also considering that Amazon today was down, let's see, make that a daily chart. Amazon closed under 180 today, down almost 8%. So we got averages with some weak leadership stocks still posting new highs. We got the Russell 2000 now, the strongest performer among the major averages today. That means the soldiers are starting to catch up with the generals. So that's a good sign. And as I've said before, until we see a true selling day where all the major averages close down at least 1% on the day, and I would say now probably 1.5%, but probably 1% would be good enough to call a true selling day. Until we see a day like that, my thought is that this market's going to keep going higher. So keep those thoughts in mind, and we'll see you down the road.